Hey everyone, welcome back to the channel, your number one source for income-oriented investing. It's time for the monthly series where I will do a overview of the top high-yield income-oriented funds on the Canadian market. So this is going to be the video for the Canadian listed funds. Make sure to check out the ones for US listed funds in a separate video, which is going to be released very, very close, if not one day before, one day after this video here. So in case you didn't know, I did separate the US listed funds and Canadian listed funds into two separate videos just because there's so many new funds. The video was getting just too long to cover both markets. So this is for the Canadian listed fund. So let's check out a quick overview of the stock market in the last month, the overall stock market. I am filming this, by the way, as you could see, on April 1st. I want to make sure that the videos are edited properly and released for this weekend. So last month, Canadian market has done actually better than the US market. Not really surprised. The closer we get to those rate cuts, the more the Canadian market will probably go up because it's so cyclical. Plus energy, very heavy on the energy, right, in the Canadian side, and energy is doing really well. Financials are picking up. Cyclical, of course, should go up when interest rates start getting cut, which we seem to be getting closer and closer. So as of April 1st, if I just click on 1 month here, it's up 2.83%. The TSX Composite Index, which is basically a general overview of the overall Canadian stock market. If we look at the S&P 500, also good in the last month, up 1.98%. So still good, not as good as the Canadian market, but the S&P 500 and even the NASDAQ have really ripped it, done really, really well in the last couple of months. If we look at the NASDAQ, which has just exploded recently, this one in the last month has stayed relatively flat. Doesn't surprise me. Yes, tech stocks are amazing, but they just can't keep going up and up like a rocket ship forever. But basically the NASDAQ has been flat for the last 30 days. So let's move on to all the top high yield funds on the listed on the Canadian market. I'll let you know if there is any changes, any news for any of our favorite providers. Of course, remember guys, I'm focusing more on the diversified ones, right? The hold forever ones that should be, in my opinion, could be core positions in your portfolio, but I'll also look at the more sector specific niche stuff as well, if there's any big news or something like that. So I'd like to thank the sponsor of this video once again, a good friend of the channel. It's Harvest ETFs. They have a lot of great income-oriented funds, like their all-in-one, my personal favorite, HDIF, of course, the Harvest Diversified Monthly Income ETF, which is a great ETF to have as a core position, in my opinion, if you're an income investor. But there has been some news from Harvest. There's 3 income-oriented ETFs coming, guys. And I'm happy to announce that I've already booked a one-on-one with the CEO, Michael Kovacs, to talk about these 3 funds or these 3 new ETFs. So you could read about it. This is the article, or they basically filed the prospectus, which means ETFs are coming, but they're not out yet, on March the 6th. So it's going to be the Harvest Balanced Income and Growth ETF, a leverage version, right? So the same thing. You just see the enhanced leverage version, and also an industrials covered call ETF, HIND. So industrials are going to be companies like aerospace, manufacturing, things like that. So it's going to be interesting to see what these, obviously the industrials covered call ETF, we kind of already know what's coming, right? It's a collection of top industrial stocks with covered calls, but they have really, what interests me is the Harvest Balanced Income and Growth ETF and their leverage version. So as per what this article says here, if I just make it bigger, it's going to be the first high income generating balanced ETF in Canada, primarily focused on utilizing covered calls. Will provide consistent monthly cash distributions, of course, while seeking to deliver steady returns through a balanced mix of equity and fixed income ETF. So in my opinion, the way I see this ETF, and of course we'll find out soon, probably in a couple of weeks, and we'll talk to Michael Kovacs about it, is it's going to be, whenever you hear the term balanced, there's typically like a 60-40, 60 stocks, 40% fixed income. So I'm assuming it's going to be, and I'll ask Michael this, something like an HDIF, but even more steady and has more fixed income in it, in case you're a balanced investor and you don't want all stocks, you want a little bit more stability and some fixed income in there, which could be a good idea now because fixed income will probably rise when rates get cut. So we'll see what that ETF is all about shortly. Very exciting when Harvest announces new ideas, new income-oriented ETF. So we will find out shortly. So let's go through all the funds, guys, all the top income-oriented funds. Of course, we'll start with HDIF, which is my personal favorite. No changes whatsoever here, no distribution increases or decreases. We have the same distribution, which we're very used to with Harvest. They're very, very, very consistent with their distributions. It's about to go under 10% yield. It's been climbing. I mean, this one does have a little bit more cyclical sectors than, for example, HYLD and the index-based funds that focuses mostly in America. You know, there's a US banks ETF here. There's a utilities ETF as well. So these are sectors quite a bit that are more sensitive to interest rates. So I think HDIF will do well once we get closer and closer to those cuts and when they happen. So we'll see what happens. HYLD, same distribution declared. 13.1 cents here. So two things on HYLD. First of all, the good news is that a lot of the ETFs that it holds, which of course are now all internal, they're all Hamilton ETFs, have had some distribution increases. You have LMAX and I believe FMAX and EMAX have all increased their distribution very, very slightly from last month. QMAX as well, as SMAX stayed the same. This is all great news for HYLD because it just means HYLD is taking in a little bit more income. Will that translate to an eventual distribution increase? Maybe. I have a suspicion, yes, but maybe later on. In case you haven't seen the latest video where I talked to Patrick Somerville about this, they already have a cushion, right? So HYLD is already paying out less than they take in because, you know, they're very conservative at Hamilton ETFs, which would be great if you're a more conservative investor. So I do feel like there is definitely possibility for distribution increases in the future. Another thing I want to mention is that the tax information has come out for HYLD, and you might be wondering why it had such high amount of foreign income. Now, just remember, guys, and this I confirmed with Hamilton as well. In 2023, HYLD still had a lot of third-party external U.S. listed ETFs, right, like JEPI, JEPQ, QYLD, RYLD, etc., and all those generate foreign income. That's why in 2023, the tax breakdown, you're going to have a lot of foreign income. But I feel like starting next year or going forward, once they internalize the HYLD, now there's going to be very, very little foreign income because they're all Canadian listed ETFs. So it's going to be mostly, my opinion here, the big majority is going to be capital gains and ROC going forward. There'll probably still be a little bit of foreign income and eligible dividends because there are US dividend stocks in there. Some of them are dividend stocks, right? Like the healthcare ones and the financials ones. There's some dividend stocks in there. So you got to have some foreign income. Even in EMAX, and the gold one, there's a couple of Canadian dividend stocks. So you'll expect a tiny bit of eligible dividends. But my estimate is that going forward, HYLD will be much more tax efficient, not have as much foreign income or very little of it going forward. Moving on to HDIV, their other all-in-one, which is more the Canadian gear towards the Canadian market. No news on this one at all. Same distribution, 15.1 cents as well. Moving on to the Horizons ones, which I really like as well. Same thing, no increase or decrease in terms of the distribution for USCL, which is S&P 500, basically, in quotes. QQCL, NASDAQ 100, covered call ETF. These are the leveraged ones, of course. Remember, there's always the non-leveraged versions. I would always take the leverage versions because I'm holding these long term. So USCL, S&P 500, QQCL, NASDAQ 100, you have CNCL, which is the TSX 60. They've all declared the same dividends as regular. Same thing for EQCL, which is kind of like their big universal all-in-one, which has it's kind of like the XEQ, the income version of XEQT or VEQT, not full income because there's some growth ETFs in there, but same distribution as well. So nothing really to report on the Horizons front. I know they're going to be changing or rebranding to Global X. Remember, Horizons, Global X, it's their sister companies or brother companies all under Murray Asset Management. Seems like they're going to rebrand everything to Global X Canada or whatever. So we'll wait for that. Moving on, BMAX, which I'm excited to tell you, I'm having Chris Cullen back on the channel to discuss BMAX, how it's doing, you know, that they're happy about it, if they're not happy about it. Can we expect anything, any changes going forward? You guys probably already know this. They've managed to increase the distribution starting in 2024, which is great news. So obviously BMAX is doing really well. What I would consider even though it's leveraged, one of the more stable leveraged all-in-ones, because it's about 70% stocks or equity and 30% fixed income, right? So BMAX is doing really well. Increase their distribution. No news with the BMO all-in-one, ZWQT. Don't have any news here. I mean, the distribution, I believe, have stayed the same at 8.5 cents, so nothing to report here. Moving on to the Evolve index-based ones, which I know many of you like because they have low fees and they're index-based. Not leveraged, however. No news on these ones as well. So I'm talking about ESPX and ETSX. So ESPX is S&P 500 with covered calls up to 33%, past 100 million. I mean, it's growing very rapidly. The yield is under 8 now, so I wouldn't be surprised if there is a distribution increase soon. For this one, but we'll have to see. So far, no, still the same distribution. Same thing for ETSX. Distribution has remained the same at 16 cents. So that's it for the all-in-ones, guys. Let's move on to the Bitcoin and Ethereum. If you're interested in it, you probably already know that they've increased their distributions last month, which is just fantastic. I know many of you were expecting more, but remember, it's based on volatility and the net asset value. I talk about the distributions, the distribution policy in the latest Q&A video, in the latest Bitcoin video, where Nawan comes back on the channel. So make sure to check that out if you own these or planning on owning them. Ethereum as well, which it's not going up as much, but it does follow Bitcoin pretty much. It kind of follows it. It also increased their distribution a little bit. So I expect we'll see what happens, but I do expect the distributions to go up maybe again, maybe not the following month, but if crypto, there's the volatility stays the same, there's the Bitcoin halving coming in April as well. If that starts propping up, if Bitcoin starts going up and up and up, I think Ethereum is going to follow. So we'll see what happens. And if the NAV keeps going up, guys, and the volatility remains high, I see no reason why they're not going to increase the distributions again. There is some news on the Tesla one. They did reduce their distribution. It's not really a surprise because Tesla has been going down, down, and down. So it's back at 30 cents, which is pretty much their original amount. Not really a big deal. Even with the distribution reduction, guys, it's still a massive 23% yield. So if you like, remember though, this is just Tesla. So if you like Tesla, I like Tesla, I would say, but I like the volatility of Tesla more. The way I look at this ETF, I do have it as a small secondary position. It's my smallest position in my portfolio, will probably always be that. For me, it's just a way to prop up my yield because 22% yield will do that. So I see it as I'm investing in the volatility in Tesla, not necessarily Tesla, but you are investing in Tesla, right? Moving on to the closed-end funds now. Of course, you have the king of them in Canada, Canoe EIT, which I've been seeing some people say, what's the deal with the EIT news? Guys, it was probably for another EIT that has nothing to do with Canoe EIT Income Fund, or maybe another EIT from Canoe. So just make sure when you're looking at news and reading something, you make sure to go on the fund's website to actually check if it's legitimate news or not. You will always see the announcements on the fund's website. If you don't see anything here, it could be related to something else. So one thing that just keeps surprising me every time I look is it's at a 4% discount now. You see that you could pick it up for less than what it's worth. So really, really cool here. If you're an EIT fan, which I know many of you are, for good reason. Even though the yield, I believe, is under 10% now, right? Because it's 13. Let's just say it's this price here divided by 1369. The yield is actually under 9%. It's 8.76. It's still a good pickup technically because you're buying it at a discount, which is cool. Moving on to the Brompton split share funds. This also surprised me because you have a lot of great pickup potential here. GDV is almost on par. You see it's 10 cents away, right? The NAV is 9.89. You could buy some for about 10. Even LBS, look how close the premium and discount is. I mean, it's almost on par. LCS still trading at a small discount. It's worth 7.23. You could pick some up at 7.08. PWI is the best deal because you could, I believe the discount percentage is the highest. It's worth 8.04. You could pick some up at 7.62. And if you like the Canadian banks, guys, check out SBC. I can't believe it. it's worth 911 and you could pick some up for about the same price or even at a tiny discount. I haven't seen this in a really long time. So the financial splits, guys, if you understand split share funds, you're okay with owning them, now's a great time to pick some up, because I've never seen such small premium percentages or even some discounts, which is extremely rare. Moving on to middle field, even ENS is a good pickup if you like Enbridge, you really understand Enbridge, you like it, you're okay with holding one stock, and you're okay with split share funds. The premium is very small on ENS. I mean, the price is about $11.97 and the NAV is $11.25, so it's only at a 6.4% premium, which I believe is lower than normal. It's still a premium. RS, however, is at about a 13% premium, even though I think it's still a good pickup because real estate is really the sector that's been suffering lately, because it's very sensitive to interest rates going up, right? And because I'm filming this on April the 1st, guys, unfortunately, the updated information or the updated NAVs for a DFN, FTN, and Bank are not updated yet, but with my luck, it'll probably be updated by the end of the day here that I'm filming this. But make sure to check these out as well, because even DFN, FTN, BK, if you like the split funds, if you like these ones, they're very financials heavy. Could be a good time. Just make sure to always check the NAV versus the stock price. And if you're interested in getting that report every week, become a member, because I have a weekly opportunity report, which I release every single Friday, which I go through all the split funds and actually put the premium or discount percentage for all the ones covered here in this video. All the Brompton ones, the Middlefield ones, and a couple as well of the Quadrovest ones. So that's it for the overview, guys. Now, if you're going to ask me, what should I pick up? What should I buy this month? Well, it's kind of hard to say when markets are all-time highs, like I've been telling you, but there's always some ugly duckling sectors. And in my opinion, the one that's really suffering compared to the rest of the market has to be real estate. So there is RS. RS is cheap. I'm going to buy some myself. Don't forget, they also have an ETF if you don't like the split fund, right? MREL. And by the way, another thing, I just did a Q&A with Shane, a portfolio manager at Middlefield, where we talk about the MIN ETF, which is an innovation stock ETF that focuses on dividend stocks. So this is very interesting. In case you didn't know, guys, Middlefield has 6 ETFs that are all kind of dividend focused. No covered calls with these, so the yields are going to be lower. But there's some very interesting ones, like the real estate one. They have a healthcare one, which I'm going to be also talking to the portfolio manager. I think this one has like 5% yield. No covered calls, but still a great yield. In case you don't want those covered calls, you want the growth in the healthcare sector. But stay tuned for a video coming up on MIN, because this is very interesting. It has a bunch of innovation stocks. So if you want to get into innovation stocks, AI stocks, with a little bit more defense, a little bit of active management, make sure to check out that video that's coming up in a week or two. So I just figured I would mention that. So yeah, what should you buy this month? Well, listen, it's always okay to keep adding to your core positions, right? And another thing is, I have a video coming up that talks about markets are at all-time highs. What do you do? How do you invest? So I explore that topic in that video. Stay tuned for that. It's coming out very soon, the next couple of weeks. But in terms of sectors, it's really the cyclical sectors that or the ugly duckling sectors right now, the ones that are sensitive to interest rates going up. So it'd definitely be real estate, still utilities, right? Harvest has a really nice leveraged utilities one, HUTE, that you could take a look at. There's plenty of utilities, covered call ETFs, guys. I always prefer the leveraged ones, but that's just me. The financials are starting to pick up, but I think they still have a lot more room to grow when interest rates start getting cut. And as we know with financials, there's a million options. You know me personally, I like the bank one, but even FTN could be a great option. A split fund from Brompton are really good. SBC is a really good pickup right now. LBS, because they're trading at either very tiny discounts or almost on par. So there's always something to invest in, guys. There's gold as well. Some of you who like gold maybe think gold is undervalued. There's GLCC from Horizons, right? There's GLCC, HGY for some gold. Even Hamilton now has their AMAX ETF. So always look for sectors that are not, or people are not interested in, or that are suffering, that's always the best thing to invest in if you're okay with investing in sector specific things. If not, you could always keep adding to your general core positions. There's nothing wrong with that. So that's it for this video, guys. That is basically the overview of what's happening. Remember to check out the separate video which I will cover the US listed funds. There's a lot of action on the US market when it comes to income ETFs. A bunch of them have come out. Even BlackRock is now competing with JEPI and JEPQ. It's not just Goldman Sachs. I will get to all those ETFs. I will review them eventually, but make sure to check out that video if you invest in the US listed funds in your RSP and Lira, like me, for example. So take care and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.